Well, let's turn our attention to the markets as we continue to track the latest news on tariffs. U.S. President Donald Trump has now threatened 30% tariffs on Mexico and the EU starting on August the 1st. We just told you about some European reaction to that in our newscast. We're joined now by Colin Cieszynski. Colin is portfolio manager and chief market strategist at SIA Wealth Management. Colin, great to have you with us, and thank you for joining us. What's your take, Colin, on how investors in North America and elsewhere in the world are digesting this constant flow of tariff news? And as we ask that question, of course, markets in the most part are at record highs here in North America and in Europe as well.
Absolutely, and markets have been surprisingly resilient today, all things considered, considering the growing threats of tariffs against pretty much everybody now. We've seen Canada in the last week, and now Mexico and the EU. And I mean, the U.S. is consistently going after some of its largest trading partners, but it seems like this time they're taking the so-called taco approach that Trump always chickens out, thinking that he's making these big threats and then he'll back off like he did back in April. To me, the one thing that's a little bit different this time, though, is you have that reading from last week that the U.S. actually had a budget surplus in June from the tariff revenues that have been coming in so far. And I think it'll be important. Then we'll see what happens tomorrow and Wednesday with the U.S. inflation numbers, because if they're starting to see the money really coming in, the economy holding up strong, and inflation not really taking off, then they'll probably be emboldened to keep on going. And I don't think the market's really ready for that.
Interesting. Let's talk about economic data that's coming as early as tomorrow. We get consumer price numbers both in Canada and the U.S. Tomorrow. Those are inflation numbers. That is highly prominent economic data. That is the U.S. data certainly can move the markets. And we get later in the week producer prices and retail sales for the U.S. later in the week. Let's begin with inflation. What do you expect to see tomorrow?
I'm expecting to see inflation steady, maybe creep up a little bit, probably not a lot yet. And certainly, I think one of the things that knocked the markets down back in the winter was that people thought, well, the tariffs are going to come in and inflation's going to explode, but that hasn't happened yet. And so there's two ways of looking at that. First of all, what does that mean for tariffs? And a low inflation reading would suggest that they'll probably keep going with tariffs. And then the second is, what does it mean for central banks? And unless you have a significant surprise, we're probably looking at stay the course from the central banks, both of which are meeting later this month. So we'll see what comes of that. Okay,
and earnings season gets underway tomorrow. As usual, it is a trio of big Wall Street banks, or at least two are big Wall Street banks, JP Morgan Chase and Citigroup, and a big so-called Main Street bank at Wells Fargo also reporting results. So we get some big financial results tomorrow, and later in the week we get other large corporations, and for several weeks we'll get a steady parade of S&P 500 companies coming to market with their results. What do you expect in terms of earnings growth? What do you expect in terms of the tone of commentary?
Well, it's looking like the earnings numbers might be pretty good. We've had no major profit warnings come out during confession season, so far so good. Indications were that the U.S. economy held up better in the second quarter, so that's important too. That if the economy held up well and improved is usually good for corporate earnings. We also saw a significant decline in the U.S. dollar over the quarter, so that's also good for U.S. corporate earnings as well. So earnings season might be pretty good in terms of the Q2 actual numbers and even relative to expectations. The question is going to be, what are they going to say about going forward? How are economic conditions as we moved into the summer? How are conditions now that people are realizing that tariffs really may be coming this time? And what does that mean for them going forward?
Do you expect companies in the first quarter? Some companies declined to provide guidance. They said the tariff environment was so uncertain. What do you expect in that regard this time around?
Some may continue to remain uncertain, and some might bring them back. The last week we had Delta Airlines brought their guidance back, and their stock shot up like 10% on the open that day. So if companies feel confident enough to bring their guidance back, that could be good for that could be seen as a positive by investors.
Among the heavyweights reporting next week, aside from the big Wall Street banks, is Netflix. Any thoughts on what you'd be looking for in Netflix results?
Well, Netflix is a stock we own in our in the portfolios that we manage. So certainly looking for good results, and importantly looking to see that they have continued momentum in subscriber growth. That's one metric that that the street tends to look at a lot is what's going on with their net subscribers. How are they doing in the relative to other companies in the streaming wars?
And let's finish with the banks. What might you expect to hear from the likes of JP Morgan Chase?
From the banks, the banks, of course, have their. I always say they have a finger in every pie through loans. They're exposed to huge swaths of the economy. So what I'd be looking for the banks is what do they have to say about credit conditions? What do they have to say about business conditions? And I mean, generally speaking, people will probably be looking at their loan loss provisions. That's usually seen as a sign of how are their underlying customers doing, or how do they feel their customers are doing in the economic environment.